What is happening, friends? My name is Mike. This channel is Health and Wealth. Thank you so much for tuning in today. Today is ULTY, all about ULTY. This is season 1, episode 7. That's right. We've had 7 episodes already. This is 7 weeks in a row of ULTY coming your way. A weekly broadcast, a weekly episode of my journey into the ULTY train, the culty, the ultimatums, the people who are buying an ETF called ULTY. So if you're one of those people, stay tuned. We'll talk about the journey. We're going to talk about the ups, the downs, and the uglies over the last week here at ULTY. Should be an entertaining video, and if it is, please be like the 275 people last week. Hit the subscribe button. I would love to have you as a long-term subscriber to the channel. And if you really enjoy the content, hit the join button down below to support even more. I'd love to have your support. That'd be amazing. So thank you so much for tuning in today. Like I said, we're talking about ULTY, and it's been a very, very rocky week here over at the ULTY train. I'm going to go ahead here and bring up just the stock chart on Google. And I mean, it's been a bit of a drop, hasn't it, right, in the last 5 days here. Now, if we take a look a little bit further here and go all the way back to, its highs here in July 23rd, so a month ago till now, we're down 11% share price, or 74 cents. So that's quite a big drop for people, and it's causing fear in the market. It's causing fear in investors. I mean, there's been a lot of people that have recently joined ULTY, and I'm just going to turn my mic down just in case it's a little loud here. There we go. That might make it a little better for you. But it's been tumultuous. I always choose words that I can't say. Tumultuous. Been a rough month, that's for sure. But I mean, let's be real here, everybody. It's been a rough few weeks for a lot of stocks out there. Palantir being one of them, Coinbase being one of them, MicroStrategy being one of them. And you know what's weird, everybody? All 3 of those are inside, or at one point were inside of ULTY. So what's happened over the last month? Well, big time economic news, fear of interest rates staying the same, inflation not going down, people losing their jobs, war talk continues, just not good circumstances for an economical world out there. Talks of housing slump, not building new houses out there as well. That's a big one too in the market. So this is what's going on. Now, what happened over at yieldmax was in approximately March 20th, it could have been March 12th, March 12th to March 20th, yieldmax made a huge change in the ULTY world. ULTY used to be just kind of a free spirit floating in the wind, and it wasn't very successful for the prior year before that. But around March 12th, they made that change, and it's collared structure in their options world. And what that really means, let's bring that down just to you and me level here. What that really means is that they ended up buying shares of the companies they were investing in. They wrote calls on those companies, but they also wrote puts on those companies, right? And so what they did is they've started to protect some of the downside risk. Now, if those weren't in place, this share price that we're looking at right now would be much lower because they ended up making some money from those puts over the last week and a half, 2 weeks specifically on Coinbase, Palantir, Msty. Those are the 3 that I had brought up before, right? So that's good news for us. So yeah, the price is going down, but it could be a heck of a lot worse if they didn't change that structure, that's for sure. Now, in that 1 month period, ULTY has paid out 10 cents per share every single week. And in fact, I'm going to bring this page up here right now. I'm going to scroll down. If you can see it real close there, the last 6 weeks in a row now, they've paid out 10 cents per share. This is incredible news for ULTY, for the people who own ULTY. And then down below that, you can see every single other weekly payment that they've made since this March 20th change. And so you can see it ranges anywhere from 8 cents all the way up to 11 cents every single week. And I'm going back, I'm scrolling down here all the way to March 19th, actually March 12th. There it is. That was the first date that we got a distribution of 10 cents, right? So that was the weekly. Now, what I've done is I've taken a look at a number here. I want to go over these numbers with you in just a little bit, but I'm going to take a pause on this for now, and I want to look at some other things here. So next thing I'm going to look at is my passive account. If you don't have a dividend tracker, this is called Passive. The elite version costs $99 a year, less than $10 a month. I have a link in the pinned comment below, but this is where I track my Alti. And so what we're looking at for me, because I live in Canada, is Canadian dollars here, and this is after tax. So far I've made $112 on Alti after tax. That hasn't counted yesterday's distribution announcement yet, but that'll add an additional, I don't know, $56 Canadian to that, roughly, give or take a couple bucks on that. But it's been good so far, right? I've only had Alti for 6 weeks now. So it's been really good in terms of payments so far. And I want to come back to that thought process in a little bit here. What else do I want to look at? There's the announcement from yesterday on YieldMax's website. Here is Alti's page, and I actually wanted to take a look at a couple of things on this page. One is the net assets, it says net assets, but we call it assets under management. This is the amount of money that we have in the fund. $3.17 billion, and there is 554,675,000 shares outstanding. Now I'm going to start tracking that number. This is how many shares they got to pay 10 cents to, if that makes sense to you, right? So they got to pay out, 554 million times 10 cents, which is pretty crazy if you think about it. If you're new to Alti, it wouldn't be a bad idea to go to yieldmaxetfs.com. That's the page I'm on right now. If we go all the way up to the top of the page here, you can hover over top of our ETFs, and then under Ultra ETFs, you have Alti sitting right there. There's a brand new one that just came out essentially today, late last night or today, called Salty. This is kind of the opposite of Alti. It's looking to fight the downside, right? It wants to fight the good fight on the downside, and they're shorting stocks on that one. For me, it's a no. All right, so next thing I want to look at is Reddit over here. Now, Reddit is just full of sometimes good advice, sometimes crazy stuff, right? If you don't go to Reddit, then you're not living life. I'm joking on that one, but Reddit's pretty insane, right? Let's just look at some of the comments on top here. Alti performance versus individual holdings. That's a really good thought process, right? That's something that I would probably look at if I were in your shoes. If you're kind of tentative, on the fence, if you want to get into Alti, take a look at the holdings inside Alti. Take a look at their performance over, the last 3 months. Then go to Alti, look at its performance, but make sure you add on the 10 cents and the 9 cents every single week to get that true performance, right? That's what I would do. Time to get real about Alti. Guys, let's get real about Alti. Alti has had some downside here, but the entire market has had downside too. Alti is not afraid of falling in price, right? This happens. And so when you have, thousands of shares, your account value is going to come down because of that. And so that's what's happened here in a softer last week. I'm going to say it's been a week, right, of downswing. It was basically last Friday that things went down. Hi, it's me, the idiot. Alti lost. Is Alti a ticking time bomb? You know what? With the collared structure, it's becoming less of a time bomb. It is becoming a little more solid, but they haven't put enough puts in place yet to kind of like make sure there's a huge padded landing, right? If that makes sense. So they do put some protection there, but it's kind of like I don't know. You got if you go biking and you have padded shorts, as an example, if you fall off your bike, you're still going to get hurt, right? And that's kind of what's happening with this, with the puts put in place here, and so you are still going to get hurt a little bit if the stock market goes down. I think that's important to know for sure. But I haven't listened to the hype or the negativity on Reddit, because I am my own person making my own decisions, and that's you too, right? So here's what I have so far. This is including the distributions from yesterday. So if we can rewind a few weeks here, what I've been talking about is from my distributions that I get from Msty, Nvdy, Cony, Hooy, I'm going to buy Alti. And so far, I'm taking it to 1,400 shares. All right. I want to talk about that 1,400 shares and why that number's in my head. If you've been watching my videos, I've been talking about building 6 pillars of income. And so that 6 pillars of income, I hope will pay me $500 a month. Okay. So 1,400 shares, if we multiply that by 10 cents per share, that's going to bring up $140. All right. Now I'm curious about the tax that I have to pay on that. So let's call it $119 after tax is what I'm going to get. If we multiply that by 4, you're looking at very close to that pillar, right? $476 a month. So that's my target is 1,400 shares, maybe like 1,450, to get it to a true $500 a month. But the reason I want to do that is because I want to have Alti as one of the 6 pillars that's going to pay me $500 a month. Make sense? So let's go over the numbers here. So far, my total investment in Alti, and this includes yesterday's Cony and Hooy distribution, which were not good, by the way, but this includes that. Okay, so I'm going to be purchasing those shares on Monday. That number right there includes the amount that they're going to pay me, and I'm going to buy Alti with, right? So $2,493. It will bring me to 433 shares. Currently, my average cost is $6.09 per share. And the current price at the time of making this video is $5.61. Cool. Current value is $2,290. And that means I have an unrealized loss of $202.84. Now, this is an important word, is unrealized, because I haven't sold these shares. I intend to keep these shares for as long as humanly possible because it's an income machine. It's going to pay me every single week. Now, that distribution might go down if the share price goes down a little bit too. So I'm going to anticipate that. I'm going to put it into my dividend calculator that we're going to take a look at shortly here. My total dividend so far is $114. Like I said, I've only had this for 6 weeks, and you can see I have 433 shares every single week I've been adding to that. Let's take a look here. So I have a whole column, percentage to target shares of 1,400. So in July, I was 11%. Last week I was at 25% if you watched the video, and this week I'm at 30%. I do have payments coming from YouTube coming up here. It's about $1,500, so I'm going to take $500 and use it on bills, but I'm taking $1,000 here, which is about $750 US, and I'm buying Alti with that. That payment should be coming in tomorrow or Monday. And then so that'll be updated on next Thursday's video, which will be Alti Season 1, Episode 8. So current price, like I said, 561. Shares drip per week is an important number for me. What I've calculated here is if I can get this dripping, because it's automatically buying shares for me every single week, if I can get that number to 25, that should equal that $119 a month. After tax, of course, and then I don't have to put any more of my own money in this. I can take the money and go put it somewhere else, right? That's the plan for me. I also have taken a look at AUM, assets under management, and I've started to record this every single week. So July 31st, this was a $2.47 billion fund. You can see it started going up August 7th, and then the scare happened over the last week. People, I don't know if it was the right move or not, but people started selling a little bit. Because of the downswing in the market. I mean, it's not a terrible idea to protect yourself, right? But $3.18 billion. And then this week, we're down to $3.17 billion. And now, as of today, I've started recording the amount of shares outstanding inside of Alti, which is 554,675,000. I'm curious where that number is going to be next week. Do you think it's going to be up or is it going to be down? Interesting to think about, right? I guess it really depends on this market and the jobless claims that keep coming out and the upcoming looming interest rates. That is the percentage of it happening is shrinking every single day as different Fed chairs and people in that area keep saying that inflation is just too high, right? So I'm curious to see where these numbers come to next week. Is it going to be lower or higher? We're going to find out. I went to Dividend Calculator here. This is on marketbeat.com, and I do this every single week, and I just want to put it out there just in case this is your first time ever watching one of these videos. My name is Mike. I talk about high yield distributing ETFs like yieldmax and like Alti. And if you enjoy the content, I hope you hit the subscribe button. Like I said, 272, let me go look it up here. 247 subscribers in the last week. So I really appreciate the new subscribers, plus everybody that's been here for the entire journey over the last year here. So what I've got here on MarketBeat is yieldmax's play of Alti in here. It's an individual ETF. The weekly distribution the distribution is every single week, and I've set it to drip, that is what I want to do with my money. I want to drip every single month or week to accumulate more shares as we go here. Once I get to 1,400 shares, I don't know if I'm going to make it drip or if I'm just going to take the cash and build something else with it. Time will tell, but for now, I'm dripping it, right? So I have it set to 1,400 shares here. I have the current price sitting in here. No annual contribution, and my current tax rate is 15%. What's yours? 0? 100? What's your tax rate? Plug it in there for yourself. And then up here, I have the initial annual dividend yield of 66%. Now, on the website, let's scroll up here. You're going to notice that the distribution rate is way higher. It says 91%. That's not necessarily accurate. It is right around 66%. I'm going to show you why in just a little bit here, okay? Last week's video, somebody said, but generally yieldmax distributions, they slow down after a while, right? So I've actually put a dividend amount increase as -3% each year. Now you can change this number to make it more real for you, but I put it -3 every year, and I put 0 annual share appreciation here. For me, if the price stays the same forever and I get 10 cents every single week, I'm a happy guy. So years invested, and then I'm going to go ahead and calculate that. We're going to find out what this is going to make us in the next couple of years, the next 5 years, 10 years, 20 years, in a perfect world, right? Right now, we're living in not so perfect of a world. So this is the kind of fantasy, all right? This is like a dream if this happens. So let's scroll down. Year number 1, I've got my 1,400 shares, and there's your annual dividend per share, $5.20. So I had to tweak that percentage up here from 100 and something, it said, to 66%. If you do 10 cents times 52 weeks, it equals $5.20. Okay, does that make sense why I did 66% now? Cool. So the number that I really care is the annual distributions. Now this says dividends, but after taxes, okay? This has already been taxed. So my annual distribution, if I had 1,400 shares today and everything stayed the same, would be $6,192.56. Now, I'm dripping these. I'm not touching them, hands off, because I'm trying to build my fund up. Year 2 would pay me $10,625. You'll notice here my annual dividend per share is going down. Because that's seemingly what's happened to Msty, Nvdy, Cony, you name the ETF, and that's seemingly what's happened to all of them. Year number 3, $17,913 in income. You got to be happy with that. Year number 4, $29,690 in income coming your way. And then year number 5, $48,407. As of today, I could live off that comfortably where I live. Dual income family. She makes way more than I do anyways, right? So I could live off that for sure. But then we get into some really exciting numbers in year number 6, $77,000 a year. After tax, year 7, $122,000. This is annually, right? Year number 8, $191,000. Year number 9, $293,000 a year. And then year number 10, $443,000. So do you have 10 years to invest this money? Do you have 10 years to set it and forget it, and that money's gone in your eyes, right? Because that's what realistically could happen here. This ETF could fizzle out and not be successful, right? That's the realism here. So there's a lot of risk to this play. There's a lot of risk. It's nice to look at this really fun number sitting right here. Isn't it nice? But we got to pump the brakes because a lot of bad can happen in the world to bring that down. And I don't want to put fear out there, but I think it's important for us to be real with our expectations. Now, speaking of real expectation, let's go to year 20 where you're making $14 million a year. Woo! Wouldn't that be amazing? But So that's the risk that I'm willing to take with those 1,400 shares. If you multiply that by $5.61, that works out to, let's do it, all right? 1,400 shares times 561, $7,800 right now. And look at that, you're bringing in 6,100. So roughly an 80% return, give or take a few percent, of course, because you're using drip. So I think that's a really, really great thing to see. Okay, so I do have one last thing to talk about here, and then I'm gonna have a little chat with you guys. This is a screenshot that I found on Twitter today, and we've seen a lot of people saying like your funds are going to zero, your distributions are dissipating, and you're losing money on your capital. So this person, William, here says, I've been in yieldmax since the beginning. I still have my original Tesla shares from inception back in 2022. I always look back at that position when I'm in doubt of the others. I bought high in the $20 range. I watched it drop down to the sevens. Then it did a reverse split, and I averaged down whenever I could. That one position has paid me back my initial investment over a year ago and still continues to pay me pure profit monthly now. It's made me a bit desensitized to the share prices of any of these yield maxes that I own. As long as it's paying, I could care less if the share price goes up or down now. So think about that, right? So if you have 1,000 shares of ULTY, it costs you, I don't know, $5,600. Or you know what? Maybe it costs you times $13 a share. It costs you $13,000 every single week. Let's go bring this one up here. Every single week, it's paying you a distribution, paying back that $13,000 1 week at a time. Who knows? Maybe a year, 2, 3 years from now, you've been completely paid back and you're bringing in total profit at that time. That's the possibility here, and that's the reason I'm invested in this. If you enjoyed the content, my name is Mike. The channel's name is Health and Wealth. I hope you hit the like and the subscribe button, and I can't wait to see you on the next one. Have a great day. Bye for now.